Okay, everybody, here we go. It's me, Gregory Mannarino, Friday, June 23rd, 2023. This is, of course, going to be lovely. It's my pre-market report, and it is lovely. Let's just, for a split second here, take a look at the bond market, more specifically the 10-year yield. The 10-year yield has dropped 8 basis points literally overnight. Now, if you recall, just yesterday we spoke about how bonds were selling off, yields were climbing, and I asked the question, do you think this is going to last, or do you think some kind of a miracle is going to occur and yields are going to drop? Well, guess what? That miracle did occur overnight. This is the Federal Reserve. They're buying it all. They're in here keeping rates suppressed. What they're attempting to do, clearly, the Federal Reserve more so than anybody else, is keep that doorway open to allow cash to move into risk assets. They want people, institutions to take on risk, putting cash into an absolutely hyperinflated stock market. Now, we'll talk more about that in just a moment. It just seems like, again, going back to presidential cycles, if you look back on every single presidential election cycle, it seems that the market defies gravity, never more so than what we have now with an economy in free fall, a global economy in free fall. We got more economic news I want to talk about here. Stock market just seems to keep going higher. We don't get pullbacks. We don't get corrections anymore. And the moment that we see bond yields rising, miracle just happens to occur. They just drop and risk in the market falls. Cash makes its way back into the stock market. This is the Federal Reserve. Again, it's central banks who have taken over everything. And I mean everything. So with that said, we do have a significant drop in the 10-year yield. However, stock futures are lower this morning across the board. Nothing dramatic, but lower nonetheless. Trading doesn't start for roughly 45 minutes from the time I am doing this video blog, pointing towards a lower open. What else is going on? The relative strength of the dollar is higher today. Gold is catching a bid. Silver under a little pressure. Crypto's about flat, under a tiny bit of pressure. Bitcoin still remains over 30,000. Crude oil under pressure again. Now, here's my take on this. We've seen gold, silver, and crude oil take a walloping this week. And to me, these things are on sale yet again. Imagine my shock. Imagine your shock. It's not going to last. I mean, could we fall further from here with regard to commodities? Absolutely. But it's the game here. Again, when you have a situation where central banks are making sure, the Federal Reserve in this case, that doorway remains open for cash to move into the stock market, well, cash needs to come out of certain things. This is called malinvestment. Cash coming out of things it should be going into, unfortunately, and vice versa. But that's the mechanism here. Cash, it doesn't fly away and go to money heaven. It just moves from one set of assets into another, and the biggest of them all is going to be the debt market meltdown. Eventually, it's going to happen. Cash bleeding out of the debt market, putting pressure on stocks, and cash moving into commodities. That's how it's going to happen. It's a fact in my view. Okay, you're entitled to your own opinion, but that's how I really believe it's going to work moving forward. So the big shocker, I suppose, is that bond yields are dropping and the 10-year yield, which is the benchmark, is coming down. Imagine my shock. We just spoke about it yesterday. Most of you agreed with me that they would not allow this to continue. It's a sick process. However, there's a couple of other things that are going on. There clearly was a mania in the stock market going on for the past several weeks here, maybe a month or so, and all manias end badly. We've got several warnings from major Wall Street banks, and even today, if you're flipping through Bloomberg, Fox Business, CNBC, they're talking about a drop in the stock market. mostly in the tech sector, which has formed they're actually calling it a baby bubble. A baby bubble. Where do they come up with this stuff, people? I really just don't know. Anyway, so we'll just see how it plays out. But again, it's impossible to have a meaningful drop in the stock market when you have the Federal Reserve artificially suppressing rates like we've never seen before, pushing cash into the stock market. It's an incredible thing. Anyway, on the economic front now, my Eurozone friends, my heart goes out to you. They're admitting you're in a recession already, and that recession is getting deeper, and you're facing higher prices across the board. The same thing in the UK, same thing here in the United States. But here in the United States, we have our lovely president crossing his fingers that the Fed provides us with a soft landing, because you see, the United States, we're immune to everything. We're just the greatest of them all here. No, we're not immune to a damn thing, and the propaganda, the lies, the deceptions are going to get even worse. If you look back at the videos that I did towards the end of last year, my number one prediction, was that lies, propaganda, and deception would get worse. Well, I think we pretty much nailed that one to the wall. Anyway, so, this issue with global inflation, it's unbelievable. How it's being played out in the mainstream. No one saw this coming. Nobody. Everyone believed the nonsense that was being fist-fed to them via the mainstream media outlets, via the central banks who control the flow of information. Oh, it's going to get better. Oh, yesterday, Powell, vomitous math, promising us that sometime in the future, inflation here is going to drop significantly as well. How about no, it isn't? How about it's going to get much, much, much worse? We haven't seen anything yet. Nothing as to what's coming down the pike. There's another piece of interesting information here. And this is just talk. All right, I don't foresee this happening. We'll see. So the Federal Reserve is talking about actually, something you and I have been talking about, I don't know, for many, many, many months. Having the major banks raise their capital reserve requirements above zero, but they're getting pushback from the banks. You see, the banks don't want to hold any reserve at all. They love this zero reserve requirement. We used to have a 10%. Now it's zero. Imagine my shock. We'll see how that plays out. Honestly, I don't particularly see that happening anytime soon. So that's pretty much where we stand here this morning. Miracle occurring here in the debt market, rates coming down, 10-year yield more specifically. This is being somewhat offset this morning. There's a compensatory mechanism, which I've discussed repeatedly over the years, between the 10-year yield, which is the benchmark, and the US dollar on a relative strength basis. How these two things work against each other is actually in the Mannarino market risk indicator equation, the MMRI. Free to you, free to everybody. Link in the description of this video. They weigh against each other. And although we are seeing, as I said, the drop here in the 10-year yield, we have a stronger dollar on a relative strength basis. In absolute terms, the dollar is dying. Just like every single other fiat central bank issued currency. It's amazing how they force us to transact in central bank issued notes. It's unbelievable. They don't want you in gold. They don't want you in silver. They definitely don't want you in any kind of a cryptocurrency, which would sidestep the central bank run system. And we have the SEC, we have our politicians here all defending the dollar or the central bank system, the Federal Reserve in this case. That should tell you something. That really should tell you something. But anyway, that's something we also do discuss on a regular basis. So pretty much that's it, people. With regard to the pounding of precious metals and crude oil, look for a turnaround here. I'm not saying tomorrow. I'm not saying today. But there's no way you can have a situation like this go on in perpetuity, meaning global debt ballooning out of control, debts and deficits ballooning out of control, central banks continuing to inflate. We need to be on the opposite side of that trade. We need to be in real things, which include commodities pretty much across the board. You all know that. I've been telling you this for the longest time. It should make sense to you. If it doesn't make sense to you, that's okay too. But you need to do your own research on all of these things as well. All right, people, I'm going to close out of this video here. We will resume the festivities, and they're just going to be lovely later on, 1:05 p.m. Pacific time. Have some questions ready for me. We'll cover them. And, well, that's all right? I will. See you later.